Amazon's first quarter revenue up 28% as the company posted its most profitable quarter ever, Maddie. This was a really big quarter.
I don't even know where to begin, but let's start with that revenue number up 28%. I look back, that is the fastest year-over-year growth for Amazon since 2012. So over 4 years and a much, much larger company, they're getting their fastest growth rate year-over-year in a long time. And if you get into the details, it's even more impressive. Of course, Amazon Web Services is getting all the headlines, deservedly so. Revenue there was up 64%. Operating profits up over 200% to $600 million. But there were two things that really stood out to me that aren't getting a lot of press. And that is, if you look at the international side segment for Amazon, sales there were up 24%. And in just recent quarters, Amazon's really reported no growth in that segment. And here they are up 24%. And then we talk a lot about Amazon Video, all the digital things the company is doing, Amazon Web Services. But if you just look at if we get to the meat and potatoes of this business, and you look at
selling stuff,
like
stuff.
The electronics and general merchandise is how they break it out. Normal everyday stuff up 32% in North America, 31% internationally, and that right there to me is clear evidence that Amazon continues to steal massive share from domestic retailers.
Did they turn off
brick and mortar retailers?
The spending spigot here a bit to juice those earnings, or are they just spending as much as they always
No,
have?
the spending didn't drop off that much at all. So I think they're just getting. Amazon Web Services is higher margin, more cash is dropping to the bottom line there, but it's so impressive.
Amazon Web Services is on pace right now to do about $10 billion in revenue in 1 year. There are some analysts out there who say if you just break out this business on its own, it's a $100 billion business. Jeff, it's a $300 billion company. Is Amazon Web Services really worth 1/3 of this overall company? I get that it's valuable. That just seems a little pricey.
Well, it's exciting right now, Chris, because it's growing so rapidly and it's reportedly a high margin business. But over time, there will be more competition. The growth rate will, of course, slow. The prices will probably come down. So I wouldn't put an excessive amount of weighting to this business. When I look at Amazon as a whole, I think in the long run, the retail business will be the majority of the value there.
Right, and I would say, with Amazon Web Services, we don't really know to what extent they're going to get pricing power, Jeff, over time, as you said, or how sticky that's really going to be if there's so many competitors getting into that space. But I think it's all to them. It's for Amazon. It's really about Prime. So we can, we assign all these really, really high growth rates or high valuations to Amazon, but really it comes down to how many Prime members can they get, because I think that's where the business is the most sticky.
When you look at the stock price, it's not at an all-time high, but up about 10% this week in the wake of this report.
Though, Chris.
Yeah, it's closing in on it. How pricey does it look to you right now, Matt?
It always looks pricey, but here, if you just look at the consensus estimates, 5 years out, 2020, less than 5 years out, they're guiding for the estimates are guiding for almost $30 per share in earnings. Whether or not Amazon actually delivers that on the bottom line, but if they think that kind of earnings power is there for Amazon, you apply a 30 multiple of that or even a higher multiple of that, it doesn't look that expensive today.